It's true. Across the globe, women aren't as prosperous as men. Gender inequality is a pressing moral issue, but we forget it has massive economic implications. If you were to put all of the women who don't have access to formal financial services in one place, they would make up the third largest country in the world. That means an entire population without bank accounts, credit cards, or other tools you and I likely benefit from daily. Prosperity for women starts with inclusive policies, products, and people around the globe, and the investment to make it happen. Welcome to the Making Finance Work for Women podcast. My name is Sonja Kelly, and I lead Women's World Banking's proprietary research division. Join me as I speak with changemakers around the globe to deconstruct the social and economic exclusion women face. We'll discover new evidence together and drive action to accelerate women's economic empowerment. Because a leg up isn't a handout, it's a global game changer. Welcome, and thanks for tuning into the Making Finance Work for Women podcast, now streaming on YouTube and available wherever you get your podcasts. If you're listening on YouTube, you'll be able to find additional insights and resources linked in the description of the video. I'm the host of the show, Sonja Kelly, and I'm also the global head of the Women's World Banking Institute. Now, before we get started today, I'd like to give a special shout out to the sponsor of the Making Finance Work for Women podcast, Ernst & Young LLP. EY is a global leader working across assurance, consulting, law, strategy, tax, and transactions. EY teams ask better questions to find new answers for the complex issues facing our world today. You can visit their website at ey.com to explore their latest insights and services. Now let's jump into the show. Today, we're taking a look back at 2025. This year was a big year for so many reasons, some fantastic and some discouraging. Now, if I can, I always like to start with the numbers, and 2025 was a big year for numbers. Now, I personally today am ending this year on a high, and I'm sipping a cup of celebratory hot chocolate because Women's World Banking is so excited to announce we have just marked an extraordinary, audacious milestone. And that is that we have created or enabled financial solutions for 117 million women and 76 million men in 22 countries in order to unlock their economic potential. And this is just in 8 years that we've achieved this milestone. We actually planned on achieving this milestone 2 years from now, so we could announce 100 million women over 10 years, but we take great pride in having surpassed our goal of reaching that 100 million, and we did it 2 years ahead of schedule, which is so exciting, a great way to end 2025. To me, this also demonstrates that bringing the unbanked and the underbanked into the formal financial system at scale, both women and men, is possible and confirms that designing for and with women unlocks growth for everyone. That is, for financial institutions, for governments, for economies, and most importantly, for the women themselves and the men themselves, and their immediate families and their households. And I want to give a special thank you to our partners and supporters who made this achievement possible. These partners and supporters inspire all that we aim to accomplish in the years ahead. We, as a world, also saw global growth. So it wasn't just Women's World Banking hitting a milestone. Women's financial inclusion reached new heights this year. We know now from data that 73% of women in emerging markets now have an account at a financial institution or a mobile wallet. This is up from just about a third of women, 37% in 2011. It is a doubling of access in 13 years, which is really remarkable. Formal savings among women also saw remarkable growth, with 36%, or just over a third, reporting formal savings activity in 2024 compared to only 16% in 2011. And I just want to note, I say 2024, it's not a mistake. It's because the data set was actually collected in 2024, even though this data came out this year in 2025. We also know that 58% of women are actively sending or receiving money using formal payment channels. That's up from 31% a decade ago. Now, again, another near doubling of payment activities. Despite this progress, 700 million women globally still do not have an account at a formal financial institution, and 1.5 billion women lack formal savings options in emerging markets. These figures highlight both the gains and also the significant gaps that remain in women's financial inclusion worldwide. There's still a lot more to do. So even as we celebrate, we know what we're going to be working on first thing in 2026. There are many reasons that we saw this growth, both at Women's World Banking and also globally as kind of a financial services industry. And I'd like to talk through some of those reasons in today's episode. We'll chat through innovation and the future of finance. We'll revisit resilience and climate adaptation. And we'll look at well-being and social protection. So please stay tuned, because in about 25 minutes, I'm going to also share my most surprising moment from the podcast this year. The first theme we're going to explore is innovation. You can't hit the big numbers. You can't hit scale without innovation. And the world is more innovative than ever before. So much happened this year. We innovated towards greater impact, towards better policy, and towards the future of finance. The future of finance is going to rest on this bedrock of innovation. We had a number of episodes that focused on fintech, digital systems, cryptocurrency, central bank digital currencies, new models of credit, forward-looking financial infrastructure, and all for the sake of women's and men's financial sector development. One of the innovations I was especially excited about was more operational, and that's the one I wanted to start with. The Central Bank of the Dominican Republic is leveraging behavioral science principles to create policy and programs with women in mind. I want you to listen to Inés Paez, a regulator and recovering fintech practitioner, talk about how she's leveraging organizational structure to achieve better goals. You have a behavioral economics background, and I wonder what some of the behavioral economics insights you have surfaced in your work that have helped design financial products women actually use and benefit from.
Yeah, well, actually, we create a behavioral economics unit within the Superintendency of Banks. I think I can say that it's the first one in the region. Some of the tools and interventions that I can mention can be, for example, the commitment savings mechanism,
Mm.
because when women often they prefer to have some structure. So when they have to save, they prefer to have some tools that they can lock some money for specific goals like
Mm.
education or health or different goals, and this will increase the effectiveness of the savings rates actually.
Mm. Wow.
Other tool is the social norm framing. Usually you tend to respond better if the message emphasize the security, the family well-being, and the long-term stability, because you're always thinking on security. I mean, when
Mm.
you have a family that you have to take care of, and they women usually prefer that the security rather than high risk and high return investment. So, security is very important.
I also talked with Paul Adams of IPA, Innovations for Poverty Action, about how things like psychometric testing and phone records and other non-traditional data can be game changers for increasing access. So I'd love to jump right into your research. Paul, Your recent report, Designing Credit Products to Support Women's Economic Empowerment, highlights the power of things like non-traditional data, mobile phone records, psychometrics in credit scoring maybe. What makes these innovations particularly promising to closing the gender credit gap?
Traditional models of lending often just don't work in these markets. So they're reliant on collateral that is often land or real estate that is not in the woman's name. They rely on a credit history that, just as Daniela said, that doesn't exist for many women, or they rely on salary pay slips, which may or may not be available for these women who are trying to run their own business. And so these traditional models really just don't fit for women in these markets.
In finance, I think most of us would agree that 2025 was the year of crypto. Rebecca Cravat of EY offered a counterpoint to the wait and see advice we received just last year on leaning into crypto. Let's hear Rebecca. I'm thrilled I get to ask this. About a year ago, I had the head of the Crypto Council for Innovation on the podcast, and I asked what Women's World Banking and other organizations like ours that are supporting financial institutions, that are advocating for institutions reaching new markets, like, what should we be doing to get into this space? And she said, it's so early days. Maybe you shouldn't move into the crypto space. The risks of exclusion are still high. So wait and see. So what would your answer be to the same question today?
I think it's the opposite.
Let's hear it.
And to be fair, we've seen a total sea change with the availability of regulation that helps firms in this space not get shut down, have clear rules of the road, and be able to run their businesses in a way that says, I'm following the law, I am compliant, I've got my risk management teams here supporting all of these activities. The US admin change definitely supported that. And I think what I would say is that most folks in this space, potentially before that, were worried that the investment of time to learn about this space wasn't worth it, that it might go away. And I think we are in a very interesting time right now where I can tell you the amount of clients that we're working with that are enabling access and capabilities in this space is significant. And I would hate for women to have the wrong perception of this space, or to have a perception from 2 years ago or from some bad market actors previously that would prevent them from being curious and learning more and exposing themselves to this space. I think there's opportunities, everything from working in this space and building technology in this space, launching companies in this space. Women have a unique perspective about what this technology can do and where it can be offered. And I think it'd be a shame to not have more women participating on that journey.
Next, in our most listened to episode of the year, Lucia Villar of PayJoy talked about how simple PayJoy makes access to smartphones through credit. This is one of those innovations that I admire so much. It makes a lot of sense, and it makes me think, why didn't someone think of this earlier? Listen to the end of the clip for a story of the impact on an individual woman. How are you closing that smartphone gender gap? Tell me a little bit more about that.
So the 13% global smartphone gender gap, it's a structural barrier to women's participation in the digital and financial economy, right? So, and then when you look at emerging markets, which is where PayJoy mostly operates, the gap is probably even wider than 13%. So to answer your question, I think at PayJoy, some of the ways that we're helping to close the gap. So in Mexico, we found 46% of our customers are women. And of those, 75% are mothers with at least one child under 18. I mentioned many of them are gaining access to their first smartphone, first credit product simultaneously, right? So we're really thinking about designing products that reflect women's real world conditions, right? So irregular income, informal work, lack of a banking history, right? And so really the idea is to focus on helping women cross into the digital economy on their own terms in a way that works for them. Our pricing and approval processes don't penalize women simply because they fall outside of the traditional banking lens. I can tell you also a story of one of our customers that I met recently. So she had just landed her dream job at this really fancy department store here in Mexico, and she needed a phone. But the job didn't start for another month. And she really wanted that job. She didn't want to have to take something else, just to make ends meet. She needed some financial flexibility, in her own words, just to get by. So it's just an example of how our products and the flexibility they provide really have this huge impact in people's lives.
At the same time, the world is ripe for innovation. David Marsh talked with me about balkanization and its impact on individual consumers. This makes me excited about innovation in 2026 and beyond. I recently took up a collection for a gift for another staff member at Women's World Banking, and I sent out to my colleagues, like, I have these 5 different payment mechanisms that I can take. Like, I can take money through my bank and PayPal and Venmo, and like there are, there's M-Pesa. There are so many different ways we can send and receive money between each other. But of course, as you say, there's a limit to that. So first of all, there's not full interoperability between platforms. And then if you're talking about sending money across borders, there are huge challenges and restrictions to that globally, let alone in Europe. And so I just wonder, in this time of increased fragmentation at the kind of geopolitical level and also increased technology, I would love for you to venture a guess, like, is this going to create barriers to inclusion, barriers to money working for people?
Barriers in payment systems, if you like, come out of the fact that Europe's been on a slow growth path. There's been various measures put into effect to try to shore up monetary union, and this has led to this balkanization that I'm talking about. So the key would be to get growth going again in Europe and to return to something which 20 years ago would have been thought of as a very paltry rate of growth, say 2%. In today's world, that would be a lot. And you see, if growth goes down, say, to between 0.5 and 1%, which is where it is in many countries, this clearly deprives people of opportunities in many ways, women and men together, if you have pressure on employment, for example. So I'd like to put it in a wider context than the payments. That said, there is, of course, a gleam of hope, or you might say also of fear, if you were to have a fully digitalized euro, which is now coming up on the fast stream. The European Central Bank, something that they are trying to put their mind behind, that could lead to, indeed, to more effective inter-country payment systems.
And now a word from our sponsor. EY applauds Women's World Banking's 45-year legacy empowering women through financial inclusion. Together, we have a common vision to build a better financial services industry, one that is stronger, fairer, and more sustainable. Find out more on ey.com. 2025 was a year we really saw the work on climate coming from the financial services community. I think if you talked to me 5 years ago, I probably wouldn't have seen the overlap in that Venn diagram between financial services and climate challenges. Not only are climate challenges a problem to solve, I think we all kind of agree on that right now, but it's also an opportunity. We had episodes that addressed climate shocks, insurance, adaptation strategies, and how financial systems build women's resilience. Climate models can actually be a source of new data, particularly for women who are more likely to be thin file customers. Puneet Gupta of Kaleidofin and I talked about this idea and how leveraging publicly available data, not proprietary data, to increase accuracy in credit scoring can actually be compassionate. So if we can actually leverage data on climate resilience, we can make credit scores more accurate and we can make loans better tailored to the real resilience needs of women entrepreneurs. And using weather data to try to predict when somebody would have a hard time repaying their loan, we were able to achieve an AUC, which is an accuracy rating of 82%. And by comparison, without using the weather data, the AUC was 76%. I call this compassionate credit scoring because we're trying to predict when somebody will have a really hard time paying their loan and might default, which has ripple effects on their borrowing in the future. Was there anything that surprised you about the results using that climate data, and how are you thinking about that going forward as a lens through which to evaluate creditworthiness?
Yeah, no surprises, Sonia. In fact, the thing is that we are a company which is kind of focused on data science, and I think for me, given that I started my career with standard lending in banks and then in non-bank financial institutions, it took me a while to kind of completely understand what is the power of data, what is the power of building these models, and how, as human beings, we can actually get very stuck because it's very hard for us to be able to visualize more than a few variables at a time. I think when it comes to some kind of a simplistic understanding, we are very good, but when you have 25, 30, 40 variables, and there are some which are negative, but there are some which can be counterbalanced, it becomes really hard. So the thing is that uh, when you start to look at risk without data, the perceptions of risk take over, and perceptions of risk oftentimes are far worse than the risk itself.
It was also a weird year from a financing perspective with the closure of USAID and other countries pulling back from funding. It just feels like there's a lot of disequilibrium in that space right now. And more than ever, the world is looking to private capital. Listen to Women's World Banking's asset management's CGAP talk about the role of gender lens investing in addressing climate challenges.
Our approach when we work with institutions to identify new products and services that are particularly meeting women's needs and preferences, it starts with market research. Often conducted by your group, Sonja. We also know, if we're talking to the women about their financial products, needs, and preferences, let's talk to them about their experiences with climate risks, environmental risks, what tools and resources they have available to them, and what they need. And let's bring that information not only back to the financial institution so it can start to design solutions, but let's bring that information into the global climate dialogue. So we're also bringing ideas for regulation and systemic level change, et cetera, to the conversation based on the experience of the women most affected.
There's so much there, and I can see how your thoughtfulness and the experience that you're bringing to this conversation could be transformational for a financial institution. Now, another theme we saw on the podcast this year was well-being and social protection. You've probably heard me before talk about how I'm not really interested in finance for finance's sake. I didn't come in this because I wanted to be a banker. I came in this into this space because I wanted to see people's lives improve. And we had a number of episodes on the podcast this year that addressed gender-based violence or public health or financial safety and financial abuse or other non-traditional lenses on how financial inclusion can be an enabler of other things in women's lives or be a barrier if it's not there. So let's look first at an episode with Dr. Kemi De Silva Abreu about the linkages between intimate partner violence and economic consequences. Her organization, Warif, has seen figures that are just staggering. I'd love for us to have a listen.
So like you said, experiencing intimate partner violence not only negatively affects a woman's physical and psychosocial well-being, but it also affects her ability to be engaged all year round in paid employment because she stays home on the days that she's physically unwell as a result of being beaten by her partner. And this in turn has a negative economic consequence on the country. In Nigeria, the impact of this actually translates to an estimated loss of 2% of the nation's annual GDP of $440 billion. So that's $8 billion that's lost. So for us to address this issue, it requires a multifaceted approach, a holistic strategy that includes economically empowering her, the woman, but then we also need government policy implementation. And then we need substantial financial investments from both the public and the private sector.
One of the most personally impactful moments in an episode for me was a conversation with Dr. Mary Ann Etiabet of Vital Strategies about how health intervention is literally not possible without finance. You can listen to her own experience, her personal experience, even outside of the work she does through her organization, pulling out a personal credit card to save a life. And we also discussed what happens when finance isn't in the mix. Let's listen.
When I was working in Nigeria on one of the HIV/AIDS programs there, suddenly one day at home, heard shouting, outside on the street. One of the neighbors' nannies was having an asthma attack, a very bad asthma attack. By the time I responded to the shouting and saw her, she was turning blue. She, was kind of incoherent. She had paradoxical breathing, and she was pregnant. Luckily, there was a hospital down the street. It was a private clinic. We rushed her to it. And the first thing the registrar said to us is, where's the patient's registration card? She has to pay. Of course, I got incensed and, made a lot of noise. But I actually, before they would see her, they required payment. At that time, cash was still the predominant mode of, exchange, in the country. But luckily I had a card on me and, they were able to process, the debit card, payment, and they saw her. But if, one, I wasn't there, and if two, I didn't have a card on me, one of, kind of a key vehicle of financial inclusion, she would have died. And there are so many stories like her that happen, every day, across, so many of these countries, where women are dying unnecessary from preventable, deaths.
I promised to share my most unexpected moment in the podcast this year. And like I said, 2025 was a great year for data. And while I think data is fascinating, kind of in and of its own right, it's also tremendously useful. I like to say we don't want to do any research without action, and we also don't want to take any action without research. And we had a lot of data points this year that will lead to action. I had a conversation that I listened to myself as a listener in your seat while our president and CEO, Mary Ellen Iskandarian, took the host seat. And that was with Dr. Leora Clapper from the World Bank. Now, this unexpected moment was all about hearing about the growth in the digital economy broadly and the potential for that. We heard from Leora Clapper that 1/4 of all women are self-employed in emerging markets. And the question becomes, how can finance help them grow their businesses? You'll hear in this clip Leora talking with Mary Ellen about this opportunity.
What's the one data point or finding from this year's Findex that you think will have the biggest potential to unlock economic growth opportunities for all?
One interesting finding about economic opportunities, I mentioned, this growth in the digital economy. So you want to think about, do women have the tools that they need to engage in the digital economy? So we're finding that 1/4 of all women in low and middle income countries say they're self-employed. Of those women, 70% today have a financial account. We're also finding that 30% of these self-employed women say that they saved in the past year. And so taken together, the question is if these women entrepreneurs, even if they're providing informal goods or services, are keeping their money in a financial institution, how can we help them grow their businesses.
Thanks so much for taking a walk down memory lane with me. I'd like to close by kind of looking forward. Here's what I'm keeping on my radar as we're going into 2026, kind of building on these conversations. First of all, a continued focus on artificial intelligence, machine learning, and all of those ways that innovation in that space are going to truly continue to transform the financial services space. Second, policy principles. I think we have a lot of fantastic evidence on what works and what doesn't work when it comes to policy. And I'm looking forward to seeing those things kind of coalescing into sort of a standardized set of advice to policymakers. And in fact, Women's World Banking is working on something to that effect that I'm looking forward to sharing with you in 2026. I also want to look at women's role in peace building. Now, this might seem like it's kind of random, but it's actually tremendously important and going to be tremendously important, especially in 2026, as we hope for peace in a number of areas of the world where we're currently seeing conflict. The Middle East and Ukraine and Sudan, these are all places where there are conflicts. There are women working on peace building. There are women sort of stepping up into the economy. And in those times of transition, moving from conflict to peace, I think finance can do a lot for women to sort of empower them to take leadership roles and to enable their economic participation after peace comes. Another one I'm looking at is credit. I think we've had a really exciting focus on access to accounts, on savings, but I expect us to be looking at credit again as sort of an essential product for women, especially as we think about women-owned businesses and growing those for their highest economic potential. I'm also always leaning into the question of how finance solves women's life needs, like health or jobs or climate resilience, and how finance solves barriers to women's financial sector engagement and economic participation. Now, finally, I can't close without offering you an opportunity. We have a match through the end of the year. For every dollar you donate to our mission of reaching 700 million women still excluded from the formal financial system, an anonymous donor will be matching you dollar for dollar until $25,000. To give you an idea of the type of impact your money can have, joining with me, I am a personal donor to Women's World Banking in addition to being an employee. I believe in the mission so much. $100 unlocks previously inaccessible loans for 100 women entrepreneurs in India or Indonesia to start or grow their businesses. And that $100 for 100 loans figure is because of the multiplier effect, because we're able to leverage capital, because we're able to help create products that women then pay back, and that money goes back into circulation. $210 trains a cohort of 30 women to provide doorstep access to savings and microinsurance. Women who would otherwise be excluded in India. That's job creation and financial inclusion. $1,000 at the same time could unlock previously inaccessible loans for 1,000 women entrepreneurs in Indonesia to start and grow their businesses. So you can see how your money can have an impact even beyond the initial donation. Thank you so much for sticking with me this year. I look forward to talking with you in 2026. And until next time, please stay engaged, stay informed, and I'll see you soon.